What is going on, everyone? My name is Kenneth Beard here with Stock Indices, where I go over economic data reports and I go over my technical analysis to make an assumption so you all can make money making trades. Let me take the jacket off because it's kind of hot down here. So, hope you guys are having a nice Wednesday. Today is October 27th. We're getting near and near to the end of this month, so that is exciting going into November, and then after that, December and then the new year. So, yeah, that is something to look forward to. I know I'm gonna try to make 2022 the best year possible, and each year coming up is going to continue to get better and better until we elevate as high as we can possible in life. So that's just my motivational, a motivational speech for you all this morning. So this afternoon, because it's currently 3 o'clock as I'm making this video. So let's hop straight into these economic indicators here. First thing we got here is the durable goods orders that was coming in previously at 1.3%. The median forecast was negative 0.0%. The actual was negative 0.4%. So we are dropping quite a bit on the durable goods orders, showing us, some decrease in durable goods in the United States. Durable goods, I think that's like anything, any goods that last for longer than 3 years. I believe that's what they said. So for core capital goods, we're at 0.5%. We're getting up to 0.8%. So for core capital goods, we're seeing an increase in that number. Trading goods, we were previously at negative 88.2 billion, and we're dropping to negative 96.3 billion. So more trading goods that we are seeing, more things being I believe what the trading goods is. So really what that is indicating to us is that here it shows the exports of goods fell to 4.7% to 142.2 billion in September. Imports rose to 0.5% to 238 billion. So it says the U.S. trade deficit in goods rose to 9.2% to a record of 96.3 billion in September, according to the Commerce Department. Economists polled by Econoday expected a deficit of 87.9 billion. So, showing that number is dropping, showing us that the trade deficit is dropping. And the U.S. right here, it says U.S. consumer demand for foreign imports, though last month in deficit, was driven largely by a sharp decline in exports due to weak international demand, according. So showing us the demand for foreign countries needing products from America, and that is essentially what the trade deficit is showing us, that we're getting less of that demand from foreign countries. That's my assumption on it. If I'm wrong on that, leave a comment. I always tell you guys, if I'm wrong on those type of things, then to always just comment down below. And I'm open to understanding more. I'm kind of new to looking at economic indicators and putting that together with my trading style. I know a lot of the economic indicators like that, but sometimes I see new economic indicators and I'm still in that learning process. So if you guys see something or you know something about the economic indicators that I don't know about, or if I'm wrong, don't be afraid to leave, a comment down below. And that's why we're all here in this community. So with that being said, that's my assumption on that. And believe that's it for today. Yeah, that's it. So besides the core capital goods, we are seeing decreases in both of the durable goods orders and the trading goods. So let's see how that's affecting the market by looking at the charts here. First thing we're going to start off with is definitely not the RUT. We'll talk about that later. What I want to look at is volatility first. Where are you at, volatility? Where are you at? Where are you at? Here you are. So volatility. So VIX finally seeing some support here, like I was kind of assuming that it would see anytime soon. I'm not thinking that maybe it gets like 18 at the highest, but as long as you don't get too high, fill this gap here, get up back to that 20 area. We're in, a good area for volatility right now. I'm not, I wasn't expecting volatility to get that much lower than 15, because it's already at some of its lowest levels, some of the lowest levels we've seen this year, around 15-ish, 14-ish. And so now we're seeing a little bit of support coming in here, and it's volatility. The VIX is going back up, so we're seeing some demand step into the volatility, showing us that it may not be complete fear, but what it is people either taking profits or getting a little bit weary of the long stretch that we've had in the market so far. So, once we get that pullback, volatility will be here to confirm that, and that's kind of what I was looking at for the longest time, to see when volatility would start to get this. Volatility came up from 20 and we went straight down to 15. With that being said, okay, we're going to inevitably see some support down here and then bounce, and that's going to lead to a market pullback. So that's kind of what I was waiting for. That's what I was not kind of that's what I was waiting for, and that's what I was saying in my previous videos about volatility as well. So the next one we will look at is the S&P 500, and we can see here not a crazy pullback, but we're seeing some weakness up above right at the all-time highs, and that weakness is clearly signifying that this is a psychological resistance level. All-time highs, probably some offers sitting up here, and without the volume to kind of get us right through that level, we can see that the sellers are holding this market down, and we can see that it's just not super big engulfing candles. Now I would like to see it close below the high of low day, and if we can see it close below the high of low day, then that can allow me to maybe get ready ready for a pullback. So we get a pullback, or we could kind of just base here and move sideways for a while, and then that it would allow the buyers and the sellers to kind of wrestle out who is going to really be in control at this level. If the longs are in control, we would see a continuation above all-time highs into new highs and new higher lows, and things of that nature. But if the sellers take over, we're going to see it pull back just to quite a bit, not quite a bit, but pull back a little bit, maybe to the 21. I'm guessing like the 21 or the 50. If we can stay right above those levels, and they can act as support, then that would give us the confirmation that it is uptrending, but it's a normal uptrend. And an uptrend where we see ups, we see the rally, we see the pullback and the sell-offs, and then the higher low, and then we see the rally again. So we had this one little indecisive day, so maybe we pull back just below here while the EMAs catch up with it. Anything could happen at this point. We're right at the all-time highs, and so as being there, just keep in mind that it is a psychological level, and also it is a valuary high as well. So the highest point in which volume has been entered into these price levels, and there's not much, so just keep that in mind. Looking at the QQQs, Q's still moving higher. Not seeing so much of that weakness, actually seeing a little bit of volume stepping in here, and we're still pushing up for all-time highs. Seeing a little wick come in here, showing respect to the all-time highs, and we've been seeing, every other day we get kind of a red candle. Move myself out the way. Every other day you would get a red candle, green candle, red candle. And so it most definitely is a fight between the buyers and sellers on this one. Still bullish, still above those 21 and the 50 and the 180 here. So overall, we're still seeing a nice uptrend with this, and pretty soon we will see a break of the all-time highs, as long as the rest of the market and volatility stay in a pretty decent manner, in my assumption. So that's for the NASDAQ. Next one we'll be looking at is the Russell 2000. RUT, let's look at the ES futures because they don't have volume on that. But we can see we're getting, like I said, this was that point where we were getting a bunch of those resistance hits, 1, 2, 3, 4, 5, 6, and now 7 hits right here. And the buyers most definitely are showing, not the buyers, but the sellers are most definitely showing up on this one, pushing the market down. I did a little bit of a close below high low day, and we got that close. This is the high low day. Again, this right here, pulling back. If this closes, we may see it continue to move down or kind of stall out right here at this point of control. If it stalls out here at this point of control, we could either bounce or, the point of control could actually give up some of that strength, and we would see a nice sell-off right back down until the support level and continue this range-bound trend we've been seeing for such a long time on the RUT. Next thing I want to look at is bond futures. Now, bond futures are spiking up towards the upside here on the bond futures. So with this strength, this showing us, okay, those interest rates are starting to be lowered, and it was right at that point of control where we saw that reversal, and we're seeing a big upwards move here for the bonds, and that could be either a good thing or a bad thing, but in my case, I believe it's a good thing, showing us that the market is being pushed back into its normal levels as investors are able to borrow more money, and it's letting people know that interest rates are not, at those lower levels. The trend is certainly, looking like it's going to start to make way back towards the upside here for the interest rates, which that could be a good thing. And so just keep my eye out on the bonds here, and that's going to show us. We usually, when it goes like this, when bonds are uptrending, usually that shows that interest rates are falling, but when bonds are selling off, usually it shows that interest rates are being pushed higher. So, that's the correlation between bonds and interest rates. So, this is kind of the reason why I look at bonds. And, here we're getting that uptrend signifying to us that the market could be getting back into its normal levels again. And, once we get a pullback in the S&P 500 on one of the main indexes, I believe that we'll do pretty nice for a while, above all-time highs, and gradually see us continue to make progress when it comes to the overall economy itself. And I believe that's it for my indexes. What I wanted to look at though is Amazon. This is currently a trade that I'm invested in. Amazon here had that big sell-off, and kind of made implied volatility go up, and so that implied volatility went up with that drop here. I'm like, okay, that's a perfect time to sell premium, and so I sold some premium down here about 30 to 80, I believe. So I'm far enough away. I'm under this point of control, resistance and support level here. This is support and resistance on this chart, but for the way I'm looking at it, it's support. So I have a lot of reasoning as to why I put my strike just a little bit under this resistance level. And the thing that I'm looking at here, if I go to the 4-hour chart, I'm looking at this symmetrical triangle, which is kind of forming out here. And once the market does push higher, I'm expecting to see this break out the symmetrical triangle and, finally make a move back towards the upside and away from the support area. And that it also be a breakout for some patterns as well. And breakout certainly from this symmetrical triangle that I have formed here. So that's my thought process behind Amazon, keeping my short leg, just not that far. I think I'm at 32.80, something like that. And so, being right at 32.80, that's just like, okay, that's giving me the space that I need. Okay, if it breaks below resistance here, then obviously something's not right. The trend is not, the point of control is not right. The trend is not right. And that's where I have to kind of think differently and, say to myself, okay, well, your plan that you had is not working out. Now I got to come up with another plan. So that's my thought process behind Amazon. If it were to break below 32.80, maybe that would give me a clear indication, as we were already up about off of support. We bounced 3%, and if it drops back down, from the highs that it's at right now, and you know drops down to 32.80, that's a 3% away from where it's at right now, which in my opinion, that's not something I would want to be invested in, something that's dropping right against me like that. So I would for sure mitigate my risk on this trade as much as possible. I'm thinking about, since I have the trade I actually have is some put credit spreads, because we got that drop. I sold premium against it, and my thought process is, okay, if we go below my area that I'm wrong, like, you always got to have an area that you're going to be wrong at, and if we go below my area that I think that I'm wrong, well, then I will adjust that trade and think about the call side, or maybe just letting go of you know it's a nice area, and at the point of control area that it's at right now. If that breaks out, we're going to get a pretty nice move towards the downside. So I could let go of my long leg, keep my short leg open, and actually take that back. I would close the short leg and leave my long leg open, and that would be a nice move, and the premiums would increase rapidly on that single leg option. So that's just a little thought I had in mind if this thing goes against me. So that's all I got for you guys today. Sorry I made this video so late. I had a lot of things to do this morning, and usually this doesn't happen, but I want to keep my streak of giving you guys content, giving you guys my thoughts every single day in the market, and that's what I'm going to continue to do. So leave a like, comment, and subscribe, and click this video up in the right hand corner, because I make videos every single day. You're not going to miss it. And go check out my other videos, because there's great free content, and you get to pick my brain and how I view technical analysis. I've been looking at charts for a while now, so when I see something, I really know what I'm seeing. So hope you guys enjoyed this video, and I will see you all in the next one.